Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek of Kooima Kooima Varilek. Seeing green in the grains this morning, as well as the cattle market, a little lower in hogs. But Scott, let's start off talking about the cattle market because certainly we had some impressive cash moves last week, and that's really big part of the story, isn't it?
Yeah, thanks for having me. And let's definitely start with the cattle. So, Merry Christmas to everybody. Hope that went well and Happy New Year. Cattle, cash is still the king. That's the main story we're looking at. It's just staying strong. You get your cash feeders for one have been leading the charge. I mean, they're staying so strong. The numbers are tight. We know that, and it's just showing up. Live cattle, we saw some Saturday trade. I mean, it was 195 in the north for the week, and then Friday happened. We closed. We all went home to find out Saturday there was some trade. Had some 197 to some majors, some 197.50 to some regionals. Some of these majors, the cattle are going quick. You know, buy them last week, they got to go this week. So it's still that numbers are tight. You know, it's just surprising how tight that we are. So I think that's been really putting a lot of fuel on this market. Now we're setting back a little bit here after the higher open, but do like what I see. I mean, it's just telling me this thing is probably going to stay pretty good going into the next year, as tight as these numbers are.
Are you concerned at all about any end of year type fund liquidation or profit taking or rebalancing of portfolios, whatever you want to call it?
It's possible. But I think this has been a market that has been getting bailed out by these high cash prices. And I still think that that's it. I mean, the fundamentals are telling us this thing's pretty good. And I got a pretty positive basis over these next couple of contracts. So I feel pretty good about that. Even the last spike low that we had that spike down to 170 and thought, okay, maybe this is the big one. Maybe we're finally correcting, and cash bailed it out, fought it all the way back up. And I still think that that's the case. So I think you always have that worry, especially right now. You got a Dow Jones down 700 points and you got to try to figure out what's going on over there. But as of now, I think we have the table set fundamentally that we can keep this going. And I think we're going to need to for a while.
Yeah, I feel like we're getting some end of the year type profit taking finally over in that equity sector. And so that's why I kind of asked you about if we might see the same thing over in the cattle market, because it's been such a good run. The feeder market, we're all watching when the Mexican border is going to reopen, probably after the first of the year. But it sounds like it's going to be a little bit slower and more methodical, you think?
Yeah, that's what I'm hearing. We are going to get it reopened here next month is what, the timetable that we keep hearing is happening. But there's some extra protocols that come along with this, making sure that they get poured or however it is. So they've got to set up some facilities to some holding pens. So, I mean, there's a little bit of growing pains that are going to happen there. So it's not just going to be immediate. They're going to probably start to trickle across and slowly pick up the pace. So the cattle are there and ready to come, but it might not just be open the gate, shed them right across. So probably going to be a little bit delayed there, just, adding to what we would normally see in the beginning of January, a little bit of a lull on some of these cash prices. You got a lot of year-end spending that happens right at the end of December, and we can have a little, maybe a little setback in January as some of these cattle come in, because now they can take some income. Maybe that doesn't have to happen near as much as it seasonally would.
Something I should ask you about as a feeder yourself, you told me that it's pretty hard to look at heifer retention for what it costs you to keep that female right now.
Yeah, and that's been the big story. Are we going to rebuild this cow herd or not? Tight supply is what got us here. We had a suppressed, profits in the cattle industry for so many years that we got to a point to where it was, time to rebuild. And that's what this market is showing us, how tight that we are. But when you're looking at some of these prices on some of these heifer calves, bringing it north of $2,000 now, there was some for $2,150, per head. That's a big paycheck. It's hard not to load them up and send them off the place and, take that profit right now, because if you elect to keep her, or if you're electing to buy her, to try to breed her. Okay, so you're looking at, just estimated cost of about $1,000 per year on top of what you buy the heifer for. So you're looking at $3,000, another $1,000 for the next year, because she's not going to have that marketable calf for a couple of years. So you're looking at over $4,000 just tied up in this heifer, and you haven't even had interest typed into that. So $4,500 plus could happen. And it's hard to stick your neck out there for that kind of price to say, hey, am I really that confident that this feeder price is just going to stay this strong all the way through? So I think there's that need for it to stay here. And that's what we're looking at in the long-term side, saying you do not want to use okay, this is a new norm. Never use that term, because I don't think it's that, but I think it's just leaning towards these prices not be done, at some of these high levels, and really have the ability and the strength to stay here and maybe make some new highs. Yeah.
Gotcha. Okay, hog market seeing a little bit of pressure, at least early on, but do you think that we're going to see more? Are the funds going to continue to take profits here end of the year?
Hogs, man, they're getting tougher to gauge all the time, but that's what it looks like. I mean, now it's breaking when we all thought it probably was overdue for a correction for a while, and now I start to hear a little bit more about disease and some of these ice-wean prices kind of picking up and getting a little stronger. So, and oddly enough, now we're down, over $2 today, after some of that news. So I would say this has got to be tied to some money flow here. Because some of those fundamentals we're trying to turn just ever so slightly and say, okay, maybe there's some reason we've put some of this on, and they keep me guessing here. Now they're finally on the break. I mean, I guess that's a lot of money flow for the end of the year.
No doubt. All right, so grains to the plus side this morning. Soybeans are actually seeing a pretty good push with soybean meal following right along, or maybe pushing the soybeans even. So is this end of the year short covering by the funds, or is that market starting to get concerned about dryness in Argentina?
I kind of think we've got a little bit of that Argentina news pumping into the market here this morning, because it's been all, status quo. We're good down south, getting lots of rain, monster crop, record crop coming. And now there's the first little hiccup of, okay, Argentina looking a little bit dry, and that could add to the corn market probably more than to the beans. But so the corn has already been on its rally because we've had some pretty good demand. We've had some decent basis in some areas, and it's been able to do it all by itself. So I think you add that Argentina news in there, it can probably continue its rally, getting through some chart resistance spots here. Halfway retracement on the March corn was 455 and change, and we're above that. It's been able to perform, so maybe it's what's kind of helping these beans rally just a little bit. The beans have had their spike low, and now they've rallied right back into that range that we were in for 2 to 3 months, basically. So it's yet to be seen if the beans have enough strength to try to get through this. Maybe some value buying that's happening. I think that's probably the case on the soybean meal, because we haven't had much of a worry to have to try to chase after any of these your end user needs on some of that feed. But now that there's a little bit of a risk possibility, you're interested in that price, charging right after it.
Right. The funds have been short in the soybeans, record short in soybean meal, so probably covering some of those positions. They are long, though, in the corn market. How much higher do you think we can push in that market? How much more will the funds put in there?
Yeah, I've never been in the camp that we're just heading to $5 and heading higher, but it just continues to just break through all these resistance areas. So it's starting to scratch everybody's head a little bit and trying to answer that question right there. So I think with it being a demand rally, you can feel pretty good about it. Those demand rallies are stronger than supply rallies. So it has some room to go. We're still just in the mid fours. It's not like we're trading at $6 or 5.5. So it's got a little room. Maybe $5 is your next major resistance area. I mean, I don't know if anybody's going to be too scared of a big break as we move forward, in my opinion. So slowly trying to gain a little steam and a little bit of confidence that we can put a little bit on. I guess I'll whip that horse till it starts to slow down.
Yeah, it's nice to see corn, though, making new highs for the moves with 6-month highs, and hopefully we can keep going here. So thanks so much for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.